Hello real estate investors, Sam Hack here with Rent to Retirement, and today we're going to be digging into why rents will continue to increase over the long term. It's a common thought to think that investing in real estate is a risky endeavor, especially in a hot market like we're in right now. Well, yes, there's all kinds of risks associated with investing in real estate. However, as Warren Buffett says, risk comes from not knowing what you're doing. Today, let's discuss how the risk of rents decreasing is low and boost your confidence in making that next real estate investment. To start us off, according to Realtor.com, 44 of the nation's 50 largest cities now have rental rates that have not only recovered from COVID price dips, but have surpassed pre-pandemic levels. Next, the US median rental price increased 8.1% year over year to a median of $1,575 a month and increased 2.1% in August alone. So to recap, market uncertainties created a short-term dip, but the fundamentals of rental demand are back in full force and even amplified. This brings us to our first reason that rents will continue to increase over the long run: increased demand for housing. From a softer perspective, after so much uncertainty from COVID, Americans reflected inwardly at their lives and housing situations where they were forced to stay at home and prevent the spread of COVID. They needed more space for work from home situations and just to spread out the family when everyone was at home all day. These trends do not seem to be reverting back to normal quite yet, as many people are permanently able to work remotely and are putting more of an emphasis on their lifestyle. Next, from a numerical perspective, the amount of inventory in the real estate market is a whopping 2.6 months worth, which means that if there was no new inventory created, the existing demand would take all the homes off the market in 2.5 months. Also, for apartments, there would need to be 4.6 million more apartment units by 2030 to keep up with current demand. Now, that's pretty insane. We are clearly in a bit of a housing crisis. So why is demand so high and supply so low? Well, for many of the reasons that we discussed a second ago, but also because the millennial generation is moving into prime home buying years, having kids, and they are the biggest generation ever. The problem is, with current housing prices being so high, in fact, 40% of counties nationwide have been declared unaffordable for homeownership, many millennials are priced out of the market and will have to continue to rent, which is good for rental prices. Lastly, supply is low as construction of new rental units has been largely underdeveloped since 2008, when so many builders closed up shop and new development got a high-risk reputation. Our second reason why rental prices will continue to increase is because of inflation. We all know from Econ 101 that as the supply of something decreases, it becomes more valuable due to the idea of scarcity. On the flip side, if something becomes more abundant, it becomes less valuable. The same is true for the US dollar, and the printing of more dollars leads to lower purchasing power for each dollar because prices of goods and services increase. Inflation is largely caused by the Federal Reserve telling the US Treasury to print more dollars into the US money supply. The reason that so much money is being printed is because of government spending for all types of things, such as social programs, stimulus, and infrastructure. Not to say that any of this spending is right or wrong, but we must understand that this is happening whether we like it or not, and to make sure our wealth is not eaten away by inflation. The trick to making sure this doesn't happen is by buying physical assets like real estate, as these goods often track the rate of inflation. So when inflation increases, so does the price of homes, and rents increase, all while your monthly mortgage payments are fixed every single month. To further drive this point home, what is a house made of? Goods such as wood and metals, right? Well, the prices of building materials will continue to increase with inflation, so you can see how your rental units would increase in value, as well as renting for more money each month. So remember, if you want to build someone else's wealth, rent from them. But if you want to build your own wealth, rent to them. The fundamentals of economics are keeping the real estate market strong, and that means rents will continue to increase as both demand increases, supply takes a while to catch up, and inflation continues to rise. That's it for today's video. A quick reminder to like and subscribe to our channel. We have so much real estate content out there for you to learn and become a more successful investor in real estate. If you want to get started in real estate investing today, check out our website at renttoretirement.com and set up a call with one of our investment counselors to see what taking the first step could look like for you. This is Sam Hack for Rent to Retirement. Thank you so much for watching, and I'll see you next week.